Welcome to the first day of trading in March. Yep, February is in the books and we are starting a fresh month. Time to see how your portfolios did in the previous month. I certainly did that over the weekend. And now we got a fresh set of dates to look at for March. Now, we're not going into it with a pretty kind of chill environment. It's kind of a little opposite to that. We had a lot of geopolitical stuff happening. We've got a conflict in Iran and surrounding in the surrounding region, and that's really putting a lot of pressure on oil prices. Pressure going higher, and that is going to affect some stocks. Obviously, the oil companies with higher oil prices, they make more money. So we're going to look at Petrobras. That's a Brazilian petroleum company. PBR. Haven't looked at PBR in a little while. Was asked about it by a member on the member call. So I thought, hey, let's take a look at PBR. And we'll look at some other stocks too. Earlier on Discord, I heard Palantir is doing really well. So we're going to take a peek at Palantir and see what is going on over there. Those guys don't produce any oil, but they're a really good software company. I'm joined by Daryl, who's going to handle the technical analysis. How are you doing this morning, Daryl?
Doing wonderful, Victor. It's good to be here. Hello, everyone.
So we were in a conversation before we went live around oil prices, and that is a tough one to figure out. But I guess, I'll let you speak first. What's your expectation on these oil prices? How long are they going to be around for?
I've been listening to some experts that specialize in oil, and they said we probably should creep up to about the $80 a barrel range. And we do have a little bit of oversupply right now, but we they were kind of expecting that the energy stocks would probably do well through the end of the year.
Yeah, looking at I'm going to say the 5 year oil prices have been well over where we're at today, which is at this moment $72 per barrel. Well over that. So hitting $80 is not not really out of reach. It's within looking at that 5 year, it's within the range that oil prices have been. So yeah, we can go there. Now, one thing I'll point out is like here's 2022 at the beginning, right? And we saw oil prices really shoot up. They hit a peak of $115 per barrel. Over here, 118. Coincidentally, the stock market really struggled in 2022, and so did the economy. Now, the government in 2022, if you recall, in the US was really creating a lot of stimulus. We were coming out of COVID. We didn't want, I guess, the leadership at that time thought we don't want any civil unrest, right? So we want to keep some money in their pockets. So a lot of stimulus was going out. And I think that helped. But those high oil prices, boy, they take a lot of money out of pockets and wallets. And the discretionary companies struggled. Even tech struggled a lot. So every time high oil prices come up, they tend to bring stock prices down. Obviously, this is a live stream around stock investing. So that's one causal factor that I keep an eye on. And I'm invested in two oil companies. It's not a major part of my portfolio. Although right now, owning oil looks awesome. Over time, I just don't want to have most of my portfolio in oil because it underperforms most years and it overperforms when oil prices are high significantly. But on average, I'd rather be in like technology, communication services, and the right financial services companies are going to grow much faster. So I got to watch the allocation that I have towards oil prices. Right now is not a bad time to think about it because we're beginning to see this increase in oil prices. It could go higher. It could go 80, 90. If it goes 90, geez, these oil prices, these oil stocks are gonna really lead the scoreboard, so to speak. So that's what's going on. That's what's moving the market so much. And it looks like oil is increasing in momentum. We're up 9.28%. Interesting. So that's going on there. Looks like Shadow Guy's on. He's talking about DNO. So I put DNO on the list, Shadow Guy. Good to see you this morning. All right. So I went over that. Let me take a look at the heat map. This is the year-to-date heat map. It's the beginning of March here. So good time to take a look and see what's been going on in general. So we see a lot of green over here. This space isn't the most exciting space on the board. Consumer staples, boy, that's a little boring in nature, but boy, it's been doing well. First 2 months, see a lot of green, see a lot of double-digit positive gains. Of course, energy's been kicking butt and taking names. Some parts of industrials have just been on fire. And with this conflict, the aerospace and defense space is going to really go up, right? You would expect, because there'll be more jets, missiles, and that kind of thing needed. So those stocks will probably do well. But I think these pieces could struggle. Just to drill into it, right? How many more Caterpillar machines are going to be needed if you have a long, conflict? I think globally, businesses and governments are going to be conservative in their capital projects. They're going to be like, hey, let's slow down a little bit. We may be in for a really bad economy. And then looking at railroads and like UPS, FedEx kind of companies, if you have high oil prices, you'll see their input costs, which is fuel, go up, and they'll either eat it and their margins go down, or they pass it along to their customer, and then that customer has a higher cost. So somebody's going to pay for that high oil price. So some of the spaces within industrials are going to have a headwind, have a harder time. So these spaces have done well year to date. Some spaces that have just been shellacked, software being just put down, stepped on, left behind. You fill in the adjective you'd like, or the verb, I should say. So with financials, we've seen some recent credit worries, and let's kind of talk about that for a little bit. I've heard the credit worries, and I guess it's a combination of things. First, the data center build out is creating additional debt with some companies, and some of these companies are not the best known companies, right? So I'm talking about like the OpenAIs, the CoreWeaves. These are like new companies, and it's kind of worrying investors. Second is some companies have gotten themselves into trouble that are pure play finance companies, and that's beginning to kind of create an environment of, if anything, just more fear and concern. But any thoughts you have on what financials have done year to date and what's driving it?
Well, according to FactSet, financials are supposed to be the worst performer this year at only 8.3% gain for that sector. So that is the worst of the 11. So you can see that here. So this is the bottom up target price estimate for each of the 11 sectors. So the financial credit worries have been going on since about July of last year. It really affected business development companies first. And then there were some, that was just kind of general in nature. And then there were some very specific items. One of BlackRock's funds reduced their net asset value by 19%. So that took a hit on all of the BDCs. And then a Blue Owl private fund had to slow down, or they stopped withdrawals from that fund. So that caused a another concern, and that spread overall across the BDCs. And then our private credit in general. And then there was let me think here. I can't remember that one right off the top of my head. But then Friday, there was two banks now these aren't BDCs, these are actual banks, had made loans for some mortgages. And now they're alleging that there was some double counting of collateral, which is considered fraud. So that's when it spread to the banks on Friday, and all the financials, even though it was related to UK banks, two of them, it hit the financial sector overall. And I noticed that even companies like Prudential had a pretty big drawdown on Friday, and they don't make loans like that. So it was pretty much just widespread across all the financials on Friday, including the BDCs and everyone else.
Yeah, back to the Great Recession that was led by the meltdown of subprime loans. It's a different set of facts, but similar, which is, back then there was fraud. There was some fraud going on, and it kind of entered the system, and then it created a big giant problem. I don't know that we're there, but it is an area of concern if asset prices are being overstated, or I should say balance sheets are overstated.
People that live through that kind of have some PSTD. So if it even looks like it could be something like that, anybody that lived through that's going to be very cautionary.
Yeah, and what was scary about that was all this happened with, man, um, the financial companies. They're the first ones to say, "Oh yeah, regulations like really bad and holds us back, holds the economy back, and all that stuff." Put a period on that. I happen to be on the side of less government, less regulation, but on the case of the subprime meltdown, for Pete's sake, man, those guys were just like out of control. They were selling these collateralized debt instruments that were just absolutely fabricated. So if they're going to do that, of course you have to have regulation. You got to have a few sheriffs in town, or it's going to be a lawless situation. And I think that's what we observed in 2008. In this scenario here, hopefully they're catching this early, and it's not going to be a big giant problem. All right, good stuff. So we went over the heat map. That's where we're at overall for the year to date. The theme a couple of themes that I'll point out is this space is beginning to have investors leave. NVIDIA had superb earnings, excellent, A+. Stock sold off. That was a big surprise. How did you feel about the NVIDIA earnings, and then what happened to the stock afterward?
That's kind of been the pattern over the last few earnings. So they did have really good earnings, but I think the price had already kind of accommodated that. So it didn't surprise me that people were taking a little bit of profit. But NVIDIA, I think, is can't remember what their PE is right now, but it's like 21.
It's one of the lowest ones. I think of the
Yep.
top 10, it's the best PE.
Yep.
Of the top most valuable companies, it has the lowest PE.
And I think that's the case for the PEG ratio as well. So I think Nvidia is still a good buy. I hear talk about it. People worrying about the pullback in the data centers, but I don't see that in the next year or so.
So, you ever heard the expression, be careful what you ask for because you just might get it?
Yep, exactly.
So, 4 to 6 months ago, I was complaining, man, stock prices are too high. And voila, the universe, I guess, heard my comment, said, all right, here you go, buddy. Here's lower stock prices. Like, oh, okay. I hear you loud and clear, universe. All right. So I'm trying to get what is the average PE ratio for the S&P. All right. I caught Gemini sleeping on the job here. My Gemini isn't like cranked up. Here we go. I think it's going to do it this time. All right, so I want to see what the average S&P is, and then we'll take a look at see these big stocks here. You got Nvidia with a 21.5, and according to Gemini, current 27.12, the forward 21.6. So you can buy Nvidia at the average S&P PE ratio. Nvidia is not an average company. Nvidia is a very great company. It's a excellent company making lots of money. Now, there is the fact that, hey, it's in a cyclical industry, okay? It's not like, hey, they're going to boom, boom forever. They're going to have a slowdown at some point. It just has to. So I think that's what smart investors, institutional investors are looking at going, hey, the party's going to stop at some point. So we'll see. Apple's at a 30, Google 27, Microsoft 22.38. That's an opportunity. Amazon 27, Meta 21.44. I correct myself. Meta is the number one PE ratio, or the best PE ratio out of the top 10. That is looking pretty darn good. TSM 26, Broadcom 31. Broadcom announces on Thursday this week. So, or was it Wednesday? Wednesday or Thursday, Broadcom's going to announce. Tesla 195. Wow. How does Tesla keep its stock price so high? Do you have any comment on that, Daryl?
It's definitely not on the fundamentals. It's what the future holds for Tesla.
Yeah. Now, I laugh because that's been the investing theory in Tesla for 15 years. So it's like, okay, at what point what future are we talking about? Like 50 years from now, 5 years from now? Because I can tell you the 5-year future for Tesla doesn't look all that great. It doesn't. We're going to make robots. Okay, great. Who are you going to sell them to? Who's ready to buy them? Who has the money to buy them? Like, what's the purpose and use of the robot? Just some dumb questions. Just want to know, what's the addressable market? Is that market ready to buy your robots? How are they actually going to use them? Is it going to be just a novelty item that, oh yeah, we got a Tesla robot and it greets people when they arrive to our office or something like that? So I think the robot usage is going to evolve over the next 10 years. And some companies are already doing it in an industrial way, and it's not new, right? We've had robots doing welding on production lines for a long time. And in warehouses, Amazon's got over 1 million robots already in production, in usage. So Tesla, I don't know what the story is that investors are really hanging on to, but I'll let them invest in Tesla and I'll invest elsewhere. Berkshire is 21 PE. Look at that. So it's low. It hasn't been a performer. And I don't know that. I always have to like pay total respect to Mr. Buffett, but I don't know that Berkshire is a great place for my money for the next 10 years. I think they're going to have a period of time to prove themselves. The new CEO, and we'll see where it goes. We will see. All right, so that's kind of high level. We've got a good number of people on. Hey, everybody, thanks for joining us on the first day in March. Yeah, so
You didn't mention the PE on Walmart.
okay, so let me get back to that. Before that, I got to start putting into my talk track that start complaining about stock prices being too low, and then maybe the opposite will happen. Let me start by saying I think stock prices are too low at this time. All right, Walmart PE ratio 43, a 43 PE ratio. Now, what's wrong with this picture, folks?
Yeah, I'm telling you.
So Walmart, let's just compare gross margins from number 43. And I'm not going to put it up against number 1 because these guys have gross margins that are like awesome. But let's put it up against Microsoft, which is a good fair compare because this is a older technology company with diversified businesses and so forth. And when we look at the compare, Walmart, I'm going to look at a couple things. I'm just going to go straight to the stats. It's like in sports, just show me the stats. Margins, gross margins, 25. Profit margin, 3. If my bank said, hey, I'm going to pay you 3% on your money that you put into my bank, I'd be like, whatever. Doesn't really float my boat, doesn't excite me. It's just 3%, no big deal. 3%'s nothing. I don't want to spend too much time making 3%. Let's look at our friends over at Microsoft. Gross margins, 68. Triple the gross margin level as Walmart. Triple. Profit margin, 39. Hey, folks, this is completely different business. And you can buy Microsoft at 22, or you can pay twice the PE ratio for Walmart. What is wrong with that picture? What are people thinking when they buy Walmart stock? But hey, I'm going to stay in my lane, look at fundamentals, and invest the way I do. But thanks for pointing that out, Daryl.
Yep. So people hear that Staples are doing well. They are doing well, but I'm looking at Walmart and Fastgrass, and they are so far extended above their fair value and above what even the normal market multiple. So this blue line is what the market typically applies to Walmart. So it's a good company, no doubt. So they tend to give it a higher valuation than what would be calculated as fair value for a company with this kind of growth rate. But people that are buying it right now, man, if they're not managing their risk, it is going to be an ugly picture at some point. And then you go and look at something like NVIDIA, and we'll look at Microsoft as well. Let me get to NVIDIA. Let me take my transactions off of there. And they're trading right at value with growth rates of 69, 30, and 21 out into 2029. This is a much better looking picture to me than what I'm seeing on Walmart. Not that I have anything against Walmart. I do not. It's just too expensive right now. Look at Microsoft, and they're trading above their normal market multiple and fair value as well. They do have pretty good growth rates, although these two out here in 27 and 28 are only about 3 or 4% better than Walmart.
Yep.
So it's kind of interesting when you can see it visually and what people are piling into staple stocks. You know, at the prices where they're at right now, it's not going to end very well if people aren't managing their risk.
Yeah, and one thing I would put out there is right now staples are looking good for the moment, but if you invested in staples and looked at the 10-year performance, you would have well underperformed technology, communication services to the point where you did yourself a lot of harm to your portfolio. So don't treat where we're at right now as, hey, this is the right move for the next 5 years. Maybe it's the right move for 2026. Can't argue with that. Can't argue that. But as I look at companies, right, you guys think about my quadrants here. This is why I do these quadrants. Staple companies tend to be in this gray. And it's a investment that you got to know when to buy in, right time, right price, right conditions, and know when to get out. It might be a year, 2 years, but it's not like a green company where, hey, I want to own this business for a long time. Okay. I want to own, example, Meta for a long time. If it keeps doing what it's doing, why would I ever sell that business? So that's a really desirable business. And I think that like Walmart is clearly in the gray for me. A lot of these staples, I think 100% of them are pretty much a temporary investment or an investment so I can diversify. So that's definitely one thing that we got to think about as we manage our portfolios. All right, so what's happening with oil here? I guess oil is going to be the big talk today. It's up 9.29%. Wow, incredible. All right, so let's talk about a question that just came up, which is from Ricardo. Do you guys think the healthcare sector is being neglected? Like BSX. All right, let's look at BSX. Boston Time. So I'm going to give you a short answer and then kick it over to Daryl to see what he has to say. And the overall answer for me is I wouldn't use the word neglected. I think that healthcare isn't there isn't a lot of confidence in the space. It's not receiving a lot of investment. Although I've seen a couple glimmers of potential recently. And I don't think it's going to be I think it could be a really good sector for 2026 given this scenario. What do you think, Daryl?
Oh, I invest in healthcare. I don't necessarily overweight it at the moment. And I'm looking at the BSX chart, and boy, they definitely took a hit back here. We've got this long-term support resistance line where they are finding a little bit of resistance or a little bit of support rather. Let me go back to, so I put this line across these prices right here that cover a couple of years and then another year right there. And they really just ran up in price. And then we found somewhat of another level here, and they are finding a bit of support there. So let's go back into 1 year. And these medical equipment companies, I know Boston Scientific's into some other things as well, but um, medical equipment companies that build hardware, those are some tough businesses to invest in my experience. I haven't done very well in those, so I watch them, but I kind of steer clear of them for the most part. So Boston Scientific's in a confirmed downtrend, the 200 days declining, the 50 days declining and below the 200. 21 days declining and below the 50. RSI has spent a little bit of time above the 50 line. We can see that it peaks up for just a day or two and then drops right back below the 50 line. So for the most part, since about September of last year, they just have not performed very well. We are getting somewhat of a buy signal on them on the daily view as of the 24th of February. Lot of distribution over the past month with a little bit of accumulation the past week, and the money flow is very bearish at the moment. So like I've said many times, I wouldn't get too terribly interested in this until I see it close for 1 or 2, 3 days above that 21-day moving average.
I think, healthcare could be a good sector to invest in because the valuations are there. It's just and I would say that the biggest story right now is oil and the conflict with Iran. If that ends up creating a longer lasting problem, headwind, that's going to take a lot of the mind share, which is going to take away from the attention. Healthcare tends to get slammed every time the government says, oh, yeah, we're going to cut this from Medicare, or we're going to do this to healthcare, or we're going to go after the health insurance companies because we think they're making too much money. Those stories tend to create negative sentiment towards healthcare. But right now, they got rockets flying around the Middle East, and you see the news media really showing, plumes of smoke and so forth. I think people are going to reset, kind of like, okay, what's the biggest effect on the global stage, and that's this conflict. I don't know if I can call it a war at this point. I don't know how to define that stuff. I could tell you it's bad, and so I think that could change the sentiment perception of healthcare. I think we can begin to appreciate healthcare companies more. Like, oh, hey, like United Therapeutics is one of my stocks. I'm going to call them a medium cap at this point. They've graduated from being a small cap, and those guys are first. Their primary drugs help people with these diseases around their lungs, and if these folks before United Therapeutic, there was some people dying, a lot of people dying, and now they have a treatment, and they advance the treatment. Their treatment helps people with this condition, but you had to inhale this powder into your lungs, which was really uncomfortable. It caused some people to really cough a lot, but it helped them. It saved their life. Well, they just came out with a mist that's going to make the delivery of that drug much better for that patient. And the stock really flourished. Their earnings were fabulous. And the CEO there is incredible. If you want to observe a really quality earnings call in a team of people that are really just kicking butt and taking names, United Therapeutics, listen to their earnings call. Second is they're doing something that makes my head explode. Forget about robots. These guys are growing organs in a laboratory meant to be transplanted to the human body. They are going through trials this year. They have human beings that are going to take these organs. Okay. They think they can get to a commercial stage of these organs, organ transplant xenology or something like that. And just 2030, okay, that's 4 years from now. And we hear about people needing a kidney, needing a vital organ, or they're going to expire, or their life is really compromised. They have to go on dialysis and all kinds of stuff, really. Well, this company's trying to create a solution to that scenario. And I think that's absolutely incredible. I love being a United Therapeutics stockholder because if they make that happen, I want to be a participant in that company. That's healthcare. To me, that whole story is fantastic. That's like NVIDIA creating GPUs that power AI. To me, the United Therapeutics story is similar. Different, completely different industry, but think of the lives affected and the benefit and the positive value that business is performing. So that's healthcare. So I think healthcare has a lot of those stories that will, I think, be better appreciated if we change kind of like what especially our government's doing, because our government has not been kind to healthcare. Then you got like United Healthcare, right? The CEO got assassinated by somebody who thought, oh, the insurance companies are the worst. I can understand bad sentiment against insurance companies. They just receive that type of attention. That's comes with the territory. But for Pete's sake, man, that just was way over way over the line. Absolutely, completely unacceptable to do that. That's the kind of sentiment that the industry's gotten. Well, now that we have this war going on, maybe there's a shift and people are like, whoa, 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 let's not talk so bad about healthcare because they're not the worst in the world. They're actually doing a lot of good things. All right. So that's a long answer to your question there, Ricardo. I think healthcare is very investable in 2026. All right. Let's take a look at the market here. What's going on, stock market? So we are trading live in March. And we are down, not as bad as I thought. I thought we were going to be down worse. What do you think when you heard the news over the weekend? Where do you think we were going to trade today?
I felt we were going to be lower, but I did take a look at Bitcoin about an hour after the attacks began, and it had fallen pretty hard. And then I looked at it later in the day, and it had recovered most of those losses. So my thought, and I actually mentioned this in my video that I posted yesterday, that I felt we were going to be down, but I was feeling a little bit better towards the end of Saturday when I saw the recovery in Bitcoin. That kind of gave me a foreshadowing that Monday wasn't going to be as bad as it could be in similar circumstances. So,
hey, Dr. Darrell, can you please explain what we're seeing here with the VIX?
what's it up to now? I can't read your screen.
23.59.
Yeah, that's pretty high. So that's an annualized rate of what the expected volatility is over the next 30 days. So it's high. Anything above 20 is very high.
That's the highest point for 2026 that we've set.
Yep.
Okay.
It also means that buying any kind of insurance to compensate for a downturn gets more expensive. It's better to buy it when the VIX is down because your insurance is a whole lot cheaper.
Wow. Okay. Thanks for explaining that. And I think the brew that we're dealing with, and Peyton, I got your comment. Let's take a look at Dave and Reddit a little later. Yeah, it's interesting to see that. You know, I'm this weekend, right? I got the news. I think I observed it on Saturday morning, and I'm like, all right, well, I don't want to think too much about it because you can't trade on Saturday or Sunday. But of course, on Coinbase, you can now because you can trade 24 hours a day there if you buy full shares. They just started trading last week, and Robinhood wants to do the same. So I gave it some thought last night, and I created a video for super investors, kind of collecting my thoughts. And I just created a video on which oil stocks are going to, not oil stocks, which stocks are going to benefit from high oil prices and which stocks are going to probably be under pressure with high oil prices. And I just finished it. I'll kick it off after our live stream for members of the channel. So I got my thoughts together. I was surprised we were only down like 1%. I'm like, okay. Because it could really throw things upside down. It could turn things on its head. But here's where we're at. We're 9 minutes into the trading session. For all, I got to be careful what I say because maybe it will happen, and then I'm like, oh no, I shouldn't have said it. But this isn't a bad open given the news. I mean, this is pretty big news. So we'll see where things go. All right. So
the SPY is actually recovering right now. It's kind of interesting looking at an intraday chart, and it's definitely moving higher after the initial open.
all right, let's start cooking with gas here, or I guess petroleum, and talk about Petróleo Brasileiro. And I'm not Brazilian. I'm not Portuguese. I can't speak Portuguese. I can speak Spanish, but not Portuguese. I love hearing Portuguese and French. When I hear folks talk about that, I don't understand what they're saying, but it sounds so beautiful. All right, so 2% higher. This stock has been doing quite well. 43% year to date. Holy smokes. While you get paid a 6% dividend. That is looking good by every way you look at it. 5-year, 116%. Geez, this thing looks fantastic. Of course, this is all rear view mirror stuff. You're looking at what's happened, what's going to happen going forward. That's a tough call, man, because it's an oil company. If oil prices keep rising, so will PBR stock. But if oil prices come down, you know what's going to happen. Oil prices go down, PBR is going to go down. But this has been a fantastic investment. An investor asked me about this about a week and a half ago on our investor call. And we looked at it, just kind of glanced at it, but I wanted to come back to it because it's been a fantastic stock. Really good one. And this is a pretty big size company, $103 billion of market cap. Oh, man, awesome. And that dividend is also awesome. So PBR has been doing great. Another stock that came up was EQNR, which is another oil company. Now, these guys are out of Norway. And if you didn't know, Norway does have a lot of oil. And these guys, 35% appreciation. Beautiful. And you get paid that nice dividend. Oil companies pay dividends. I think you guys know that, but just in case you didn't, oil companies pay dividends because they've been around forever, 100 years. And Equinor has really delivered results for you guys in Europe. These guys are in your backyard producing oil. Now, the one thing I personally don't like that the government has a lot of involvement with Equinor, but maybe that's not a bad thing. I just don't. I like when companies are pretty much left to run themselves as they see fit. But these guys have been performing really, really well. So that's Equinor doing really well. You want to take a look at the charts on PBR or Equinor?
Sure. I have PBR pulled up. So I went back 5 years and I put this auto resistance line at these two peaks and then where it's been trading recently before it broke out. So we're definitely in a breakout above that price. And then I went back a little further. So we're definitely not back to all-time highs. I don't know how much further I can go back here. That looks like it may be the highs. So around $22. That was in 2008. So 22 from here would be about $5 upside. So they did break out above those prices that we saw a couple years ago. They found support there a couple of times and now moving higher. We do have a black candle today, which means they opened higher than yesterday, but currently they're trading lower than their open. We have a 21-day that's moving higher. They broke out above that 21-day back on the 13th of January. 50-day is upward sloping, as is the 200-day, and these are all in the correct order. It is overbought, so it's a little hard to tell They can stay overbought for a while. They've pretty much been overbought since 20th of January. They could stay that way as long as we have a conflict that we don't know the full impact of damage to the oil infrastructure in Iran. And I did hear that OPEC Plus has already announced that they will be increasing their barrels per day beginning April the 1st, so a month from now. So that'll help put a bit of supply back into the market. They've been pretty much after a lot of distribution since the 25th of September down to the 12th of January. They have been in an accumulation phase, and the money flow is currently positive. So it's not a bad time to maybe think about stepping in. Just manage your risk, because we have a peak that we saw is at 22. Can it break above that? We don't know. So you've got about a $5 upside. You'll just have to manage that pretty closely, because these can roll over just as fast as they go up.
Yeah. It's all about oil prices and where oil prices take us. So one more oil company, DNO. Shadow guys, really interested in DNO. And these guys are another Norway company that's in the oil business, and they have assets in the North Sea, West Africa. These guys, for the 1 year, winning stock. Year to date, not the best oil stock we are going to see today, but it's up 3% and it pays a big dividend. Look at that big, handsome dividend, 9.21. Looks really good. These stocks are going to go where oil prices take them, as mentioned. So we'll see where oil prices go. But if you're in oil and you had an allocation there, you're feeling good about that allocation. So looking at the heat map, NVIDIA is trying to get back some of the sell-off that it experienced after its earnings, and it's up 1%. Microsoft's up a little bit. Palantir, look at that. Look at Palantir next. That's looking really good. And Palantir is a software company, but its software does a lot of really interesting things. Government really uses it a lot. Intuit continuing its rally. Good to see that. ServiceNow is up a little bit. This is GLW was Corning's, right? Yeah.
Yep.
And then Meta's up a little bit. As expected, we got a conflict. So aerospace and defense is going up. Oil's up. Chevron's not up much, but Exxon is up nicely. We talked about healthcare. Healthcare is not having a bad day. It's having a decent day on a day when the stock market is down in general, but I'm seeing some green spots there. As mentioned, I think we might see a turn. And I'm seeing more green, Daryl.
Yeah.
I gotta keep watering this heat map because it's turning green.
My
It's getting some
portfolio is
sunshine.
actually positive right now.
Go, Daryl.
It wasn't earlier, I can tell you that.
Man, well, let's see if we can keep bouncing back here. All right, so what are we dealing with? Look at that. These numbers. Geez, this market's going higher from where it was earlier. Looks like we got a new member. How cool. Henricks, thanks so much for joining. Really appreciate you. And let me know if there's a stock you'd like me to handle on this stream or any other stream. And please get me your email address. I'm going to put my email in the chat so you can email me, and then I get you all set up with your perks. And we'll be good to go there. Thanks so much. Good to have you. All right. So market's kind of marching up. Good to see that. Good to see that. Let's see here. So let's look at Palantir. It's been a while since I've looked at. No, it's been about a month. I did a video on Palantir after their earnings. I thought their earnings were really good. And their P ratio is high. but so is their growth. So these guys are a growth company. We're going to take a look at that. The 1 year, 68%, but you see this, drop. It's been, in a way, kind of affected by this whole sell-off in software. So that's been interesting, but it's having a terrific day here. Huh. Interesting. So now when you look at Palantir, you look at that P ratio and you're like, wow, that's a big P ratio, but this nice growth, 56%, and acceleration of growth showing that they're taking big chunks of market share. They are establishing new use cases for their software. It's not just like static, software we've been working with for the last 20 years. These guys have some real good and innovative stuff. Look at these margins. 82% gross margin, 36% profit margin, and then 46.9% free cash flow margin. So they're growing fast and they're putting giant bags of cash on their balance sheet. Just putting truckloads of cash on their balance sheet. All right, so let's take a look at their forecast. 21 analysts cover them. They're thinking the future is going to continue to be a good one for them. This year, they're going to grow at 65%, 41%, 39%, 23, and 29. Terrific. They'll be a $23 billion revenue company in 2030. And their PE ratio will come down in the future if they continue to grow and make themselves bigger, have those bigger numbers so they can have an earnings per share number that's nice and big so they can bring down that PE ratio. So investors are bought in on that growth. Can't blame them. There's a couple of companies that are doing this. Palantir is in a really, really small class of companies that are just looking fantastic. Let me turn it over to Dale. Take a look at the charts on Palantir, see what he has to say, and we'll come back to a valuation on Palantir.
Yeah, this one is starting to get constructive because they are moving above that 21-day exponential moving average. The 50-day did cross below the 200-day. That's referred to as a death cross. And when 50-day does cross below the 200, that's usually a pretty opportune time to pick up a stock. And today they're up above that 21. So this is actually looking pretty good to me. I don't see much resistance here until you get back up to that 50, 200 day level. So that's about 160 or so. And they're currently trading at 142. So I think this could probably, especially if it closes and stays above this 20 tomorrow. So if you get a couple days above there, you could probably trade this one back to 160 without too much trouble. I see a base starting to form here. The last time we had a base form, we created a cup and handle. And then we got a trigger on it about the 2nd of October. That gave me a price target of 207. And about 4 weeks later, it hit that almost to the penny there. So we're starting to see the same kind of pattern forming here. So this one would have to be watched. But I might even think about jumping back into Palantir at this point and trade it back up to around 160 or so. I am starting to see some accumulation beginning to occur. We have broke back above the 40 line, and it looks like we're going to try to break above the 50 line if this momentum continues. And that would just be more confirmation that it's a good time. We do have a buy signal on the PPO. As of the 25th of February, that is in bearish territory, so we're below the 0 line, but we do have a crossover. Money flow is still bearish. It hasn't even gotten back into neutral territory. But this one's setting up pretty nicely. I may consider this later on today, or if it stays above the 20 or tomorrow, I'll take a look at it again. But I think this one's tradable up to about 160 before you hit any resistance.
Yeah, in the software space, I can't think of a company that's growing faster than these guys that is a pretty good size, right? So they're looking pretty darn good. When I look at evaluation, right, I've never been able to get Palantir to show me a discount. It's just because the future's so darn bright and the P ratio is so darn high. I still think it's overvalued when I put my ratios in there. I mean, I'm growing cash flows by 40%. That's really good. That's like growing fast. That's like Nvidia. There's only a couple companies that I would do that with. And their earnings per share growth at 25, giving them a future PE, which I hate doing. 36 is pretty high PE ratio in 4 years. Okay. And I usually go with a 25 on a good business, a business that's really desirable. But these guys, you know what? Investors believe in the future of Palantir. If they keep delivering results like they had in their last earnings, I can understand why investors are really, really bought in on NVIDIA. Palantir. So Palantir is just looking good. Good job, Palantir. So that was Palantir. So Mike brought up A-Lab. We can kind of do that one real quick. A-Lab is a semiconductor company. They do communications between big data centers, and they're down 5%. They've been kind of on a losing streak here. Year to date, 32%. Over the 1 year, up 51%. You see that this stock, it's only been traded for a year and a half, 2 years. And these guys are still on the positive side, but you see that the stocks had periods when it just really went up and it's really settled down. I'm an investor in A-Lab, and I've been in and out. I'm sure I've always been, since I started buying shares, I've been in the stock, but I sold shares around this peak. I was glad I did so. And now I'm buying shares because the sell-off is just really enough. To me, it's an obvious opportunity. Now, these guys are 19 billion in market cap, forward P of 46. We're dealing with another high PE. Is this Walmart? No, this is Astera Labs. Anyway, so 115% growth, folks. 115. And they are less than $1 billion in revenue, but that is fast growth. That means they're going to be well over 2 billion in about a year's time. Quarterly, 91% growth on that top line. Okay, they're growing fast, but do they make money? Well, let's take a look. 75.69% gross margins, profit margins 25.7, free cash flow margins of 33. Yes, in fact, they make lots of money and they're growing really fast. Very unique situation, which is why I'm excited about the stock and think if the market's going to sell it off like this and give me a discount, I will take it. I will keep buying Astera Labs and keep adding to my share count because this is an opportunity. I also think they could be acquired by one of the big guys because they are small enough to acquire, and those big guys could take them over. Now, we're seeing that this year they're going to grow 59.6%, then 37, then 28. We're going to have a decline, which is cyclical. Understood. Got it. But you see that they're going to be over $2 billion real quick, making lots of money, bringing down their PE ratio. So I want to be a part of that. I'm going to keep buying into Astera Labs. And I'll show you my valuation after Daryl shows the charts on Astera Labs.
So we do have a downtrend line that we had established in a previous live stream. All I did was extend it out, and we can see they're trading right at that downtrend line. The important thing here is to see if it can maintain above that downtrend. If it breaks down, then we could see some levels closer to 97, 98 or so. I'm looking back right here for some support. So they could, if they break down below this line, 97 to 98 would not be out of the question. We have an RSI that's still declining. And in bearish territory, we have a PPO that's in bearish territory, still declining. We had over the 1 year time frame, we had max accumulation on the 2nd of October. And we've been in distribution, a little bit of accumulation, more distribution. There has been some people moving in, but the money flow is still in bearish territory. It hasn't moved back into the neutral zone yet. Let's take a look at them in the weekly view. Yeah, so I still see some support there around 97 to 98 in the weekly view, but they have a negative RSI, negative PPO, and the accumulation. Distribution shows distribution still continuing in the weekly view, and the money flow is definitely bearish.
Interesting. All right. So I'm trying to get my Astera Labs valuation, but my Google Sheet lookups, for some reason, they've been a little lazy recently, and they're not updating on me. So I can be able to share the sheet. But overall, Astera Labs, in my book, is it's a stock that I want to own for that growth, similar to Palantir. Investors in Palantir, I can't argue with them. And I really like Astera Labs. I think if they keep growing the way they're growing, I think they're going to just be a fantastic investment for me. And I have taken enough profit from my investment in the company where when the stock really flourished, I basically got my entire investment back. And now I'm beginning to put some of that, some of that capital back into the stock. But I am playing with the house's money on this stock and think that the stock's going to keep doing this kind of volatility. But over time, I think this thing's going to probably be worth 2 to 5 times more its current stock price over the next 5 years or so. So that is Astera Labs, reducing its stock price, enticing investors to take a look at it. Let's see here. So we got some Star Trek. So if you notice the lights behind me, when you go to Home Depot and you're walking through the aisles and you see a product that looks kind of neat, well, you're looking at a little robot that has a kind of a light system that's supposed to be space behind me. And I'm a big fan of space. I don't invest in space, but I like space movies. And I'm more of a Star Wars fan versus Star Trek. But don't want to start a big argument. All right. Okay, so we went over Astera Labs. Let's talk a little Dave. Now, Dave, I like what they're doing. It seems like in finance and financial services companies, the ones that really figure out how to better communicate with, the younger crowd, people that like to use their phones for about everything, they really just kick butt and take names. And these guys have really been growing, but the stock has stalled. Now, it came out really with a lot of fanfare, but then it sold off. But if you look at the stock has stalled. So I think Daryl's analysis of Dave will be super interesting to me. Recently, it's been going up nicely. And they're going to announce today. Whoa! Everybody, rock and roll. Are they announcing after the market closes? Probably. But this stock is rallying on a down day, which is a very good sign. These guys are a growth company, 53% growth. It is $491 million in revenue. The growth is persistent, man. 63%. That's a beautiful number. And they are making money. Got 6 analysts covering them. And they are expected to continue to grow. Now, they're little, so they can just keep growing. But look at this profit jump. Holy smokes. They jumped from 4 to 12. They're going to keep that 12 and then go to $19 per share, bringing down their PE ratio for a growth company to 10. That sounds like a pretty good proposition to me. Let's kick it over to Daryl because I'm really interested in seeing what he thinks about this consolidation period and see if he can give us any expectation of where it's going to go from here.
So we've had 3 of these consolidation periods since 2024. They consolidate for almost the entire year. And then in less than 1 month, they go from levels of 99, 39 to 91. So almost a triple. And then we have 1, 2, 3, 4, 5, 6 months. They consolidated, went from a level of 90 up to 222. So, man, if you can catch these, so consolidation for 6 months and, a level shift in less than a month. So you got to be really watching this if you want to catch one of these. So let's go back to 1 year. We can see that the last time they broke out was, basically when they had a breakout above an RSI of 60. And then you can run that up. Let's go back and look at those other ones. That might be kind of interesting to look at the RSI each time, right, as it broke out.
I have
Yep,
questions
so-
for you when you have time.
Yep. So this breakout was above us an RSI of 60. Then we consolidated. We got here, another breakout above 60. And it's getting ready to do that again. We're sitting right at 59, but there's been 1, 2, 3, at least 4 times where it got up to 67 and stalled out. It didn't actually start another run. So go ahead and ask your question.
So I'm looking at the charts there, and this one here, if we look to the left, where for some reason there's a lot of investors that bought in at the lower prices that are sitting on the stock. Is that a correct
Mhm.
conclusion on my
Yep.
part?
Yep, that's where most of the volume buying happened.
To me, that's a form of strength because investors are like, great, I'm up on the stock, it's a winner, and to me, it's a sign of strength. What is it to you?
Probably. You're probably right. Let me, we had a question about average volume weighted average price. So I'm going to look at that. It was an offline question. So
Mhm.
let's look at Dave. And we can see that this is anchored VWAP. This is the average price based on trading volume. So let's go back a few years and you can see that those prices they kind of correspond to these price bars here, price volume bars here. So you can see that level shift up because there was a lot of buying in here. We get to the next level, you see a lot of buying right there. So anyway, I like to use these are charts that I look at every day. I don't usually show them on the show, but on all my holdings, I have the volume weighted average price. So I can see if it's trading above or below that. I usually anchor back 3/4. This one is arbitrary because I just threw the name in there without looking at when they announced earnings 3/4 ago. They may not even have been company then. I don't remember. So anyway, that's what I use anchored volume weighted average price for. I like to keep an eye on where it's trading in relation to that. So you can see that there was some pretty good time to buy each time that it touched that price line. We're a little bit above it right now. So let's go back to the charts we normally look at. So let's go out to just 1 year. So they have been consolidating. They traded outside of their consolidation box or their range. They are moving back into that. They're above the 50-day moving average, which is flat. It looks like over the last couple days, they're above their 21-day. The 5-day is crossed above the 21-day. So it definitely looks like momentum is building. We've had a buy signal since the 6th of February. The RSI is getting ready to break above 60. But it's done that at least 1, 2, 3, 4 times without really a significant shift higher. But at some point, it's probably going to do this again, would be my expectation. So it looks like a pretty good time to buy. Just always manage your risk.
Yep. And they're going to announce earnings later today. So the stock's up. I'm not going to buy any shares today, but I am going to read their earnings announcement tonight. I'll do a video on it for members and release it out to the channel if I should have time, so I'll be able to do that later after they announce. So good stuff. Thanks, Daryl. The other one that came up was Reddit. I really like the Reddit business. It has the characteristics I'm looking for, which is, growth, profit, and a company that at times is just unappreciated. In the case here, look at this. The stock was trading for $270 a share. Now it's $143. Yet at the same time, the business just keeps getting better. If you look at the financials, tell us, how are they executing? Are they getting better? Are they getting more market share? Are they getting more customers? Are they making more money? And the answer to all those questions on Reddit is yes, 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 in a really enthusiastic yes, because they're growing at 69%. So I just don't get how the market is like, yeah, the Reddit business is not as desirable as, let's say Walmart. I guess we're going to beat up on Walmart today. And they're going to keep growing. Look at this growth. Beautiful. Profit expansion. Sign me up. I am violating a sector allocation principle. I am way over allocated in communication services, and I'm still buying Reddit. It's just too compelling to me. I don't want to be sitting here 5 years from now and this thing's like double, triple, quadrupled and be like, well, I should have bought it back then. No, I'm just going to buy it and sit on this good business. It's a really solid business. So what do you think of Reddit?
So they're trading below this auto support resistance line that we saw, and then we had a support level set here that we've changed to be resistance because they broke down below that line and haven't come back up to test that just yet. That's over a 2-year period. 50 days declining. It looks like if things continue as they have, that we're going to have a death cross on the 5200. We have a 21-day that is still declining. An RSI that is bearish. It's below the 50 line and below the 40 line. When they drop down, I like to kind of see them hold, a company holder. 40 RSI, this one broke down and got into oversold territory. We are on a buy signal at the moment, but we are in bearish territory. And I see the accumulation has pretty much been going down since September. Money flow is currently bearish as well. We need to see them break above their 21-day here and get above these resistance lines that they was previously support.
All right. Interesting. All right. So the next one we're going to cover is going to be SanDisk. And this has been absolutely a surprise. And I covered SanDisk some months ago and just felt like it was too expensive. This stock is up 1,222%. SanDisk is the producer of flash memory. Okay. And its memory is being put into bills of material for computers and servers and so forth. And that's in very high demand. So the shortage has created better pricing for SanDisk and other players in the memory and storage space. And I happen to believe that's going to be temporary. I didn't expect the stock was going to go up this high. Now, my process is a process of looking at fundamentals. I stay in my lane and I look at fundamentals, and I want to, in general, be accurate and make money on most of the stocks that I buy. There's a few that I'm going to not make money on, but most of them I make money on. And SanDisk basically was price way too high. This is an anomaly stock. It obviously just took off like crazy. But if I value this stock any way I value it, it's too expensive because in the future, there'll be a day of reckoning. SanDisk does not have like these patents where it's like SanDisk is the only one that can produce this type of product. No, there's other competitors, Chinese competitors, Korean competitors. So as that competition's able to produce this product, that supply is going to bring down price. Once the price comes down, their natural margins are going to come down and back to what would have been a normal state. And when that happens is when the stocks, I expect, is going to get crushed. Gross margins, okay? Look at these gross margins. They've never been like NVIDIA. And then when there's oversupply, the margins just get squeezed. This will happen again. This is cyclical. So I think SanDisk has been an absolute success for those that bought it. Congratulations if you own it. But when the shortage ends, there's going to be a pain for anybody who's hanging on to the stock too long. And let me tell you, people are going to have happy feet to get out of SanDisk. They're going to be running to the exits, trying to be the first one out of the stock because whoever's last is going to really be put through the ringer. What do you think, Daryl?
Well, the chart's actually still looking pretty good. They're trading above their 50-day. I do see the 5-day starting to roll over. The 21-day is still increasing. The 50-day is increasing. The 200 is increasing. I have one concern on the bearish negative divergence. So this RSI peak is less than when the prices got here and the prices got here. So that doesn't mean it's immediately going to change character, but it's starting to give you a warning sign that you do have that bearish negative divergence. The interesting thing is I do not see that on the PPO. A lot of times, if we go and look at Google, I think we'll see bearish divergence on both the RSI and the PPO. This one is not doing that. So at this price here, we had a peak PPO, and on the next price run higher, we had the same PPO, and on the next run higher, we have the same PPO. So this is actually confirming the price. This one is in divergence against that. Money flow is currently bearish. Hasn't moved back into the neutral zone. Accumulation has been mostly in distribution here since the 3rd of February. But the chart actually looking pretty good. Look at the volume. The average daily volume has been increasing quite rapidly. This one still looks okay to me. Just manage your risk. You're going to hear me say that a million times, but that's one of the most important things to me.
And can you define manager risk with a little more like what are you doing and what are you looking for and how would you act to manage your risk?
Well, that's kind of a long-winded answer, but let me see if I can quickly give you some what I'm thinking about. So here's a good example. Whenever I buy a stock, so I just re-entered Apple after being out for a year. I just rebought Apple. And when I purchase a stock, I already know what my exit point is going to be. So, do you know if you're buying SanDisk, what price does it have to get down to before you say is enough is enough?
Mm-hmm.
That's risk management. So if you don't have that set and it, drops down here to 225, you're going to be kicking yourself.
Yeah.
So on every single equity holding that I have, the second I buy it, I know when I'm going to get out as well.
I term that's my exit plan. That's my exit strategy on that stock.
Exactly.
Very good. Thank you, sir. All right, let's move over to American Express. Don't leave home without it. And to me, American Express has always been kind of a fairly priced stock to some extent. It's been a winner over the 1 year, I think over the 5 years, excuse me. And this stock is one of Warren Buffett's big positions. And um, I think compared to Visa, I'd rather own Visa. I don't own either. But this one here, I think it's fairly priced if we look at earnings per share. It doesn't produce free cash flow right now. I'm not sure why, but it doesn't produce any free cash flow. American Express is a $211 billion market cap company. Now, the thing that I worry about with American Express is Visa has that network that is the most popular network, that consumers and people use to pay online. American Express is in a lot of ways the big corporate card, right? Businesses use American Express, and American Express has been successful and growing. They grow by like 10% on top line revenue, and their profits are growing by 12%. But to me, I just think they have potential. There's potential disruptors to American Express. You have a lot of payment systems coming online with the whole blockchain being behind it. That could be a risk. I think corporate spend in some ways, if you hit a recession, corporate spend should go down. So I think there's just some factors that I've never been quite a total believer in American Express, which just kept me out of the stock. And there were alternatives that I always bought into instead of American Express. Over the 1 year, this is up 2%. It pays a 1% dividend. Over the 5 year, this has been a good stock, 121%. Can't argue with that. And financials, they keep growing year after year. Looks good. But you see where when corporations stop traveling and stop spending, you could see a contraction. But that is COVID related. So it probably have to be thrown out because we're only going to have a pandemic every so often. Overall, the expectations are going to keep growing. Looks good. PE ratio looks pretty decent as well. So over to you, sir, on American Express.
So we have a 50-day that's rolled over, the 21 days rolled over and below the 500. And the 21 day is getting very close to the 200, which is still increasing, but the prices broke down below the 200 on February the 23rd. That was a pretty big decline of 7.2%, and that sounds like a Friday to me. Was it a Friday, the 23rd, the 13th? No, it was a Monday. Okay, so we're trading below the 200. There's an old saying, nothing good happens under the 200. So if this 200, I mean, it's getting ready to top out. If it rolls over, then I'm looking at a price about right there, 274 is where I would be looking for support. The RSI is getting very close to being oversold. You can see the last time we went oversold, we were down 22%. So we'll look at that. It almost is my price exactly. So I don't know. I'm looking at about that 287 price before it slows down, or that's
All
where
right.
I'd be looking at to get back in.
Excellent. Thank you.
Especially if the 200 rolls over, which it looks like it's getting ready to here within the next few days.
All right. Looking at the stock market, I mean, geez, you told me we'd be here roughly 1 hour after we opened. I'd be like, well, I'll take it. We got a conflict going on, and stock market's only down on the S&P by 0.29%. NASDAQ's down 0.14 at this moment. Not bad.
My old man portfolio is up 0.35 right now.
Nice. Bitcoin is up 4%. Man, that is looking good. That is looking real good. Let's look at that heat map. NVIDIA standing up tall, 2.27. Yep. Microsoft. I like what I'm seeing here, Daryl. I like what I'm seeing there. Meta's up nice. Netflix. Boy, Netflix, investors really like Netflix without Warner Brothers. And interesting. Capital markets looks like Robinhood is going to do well today. Yeah, 1.23. Aerospace and defense is doing well. Looks good. Energy's doing well as expected. All right. All right. We're out to the races, folks. I thought it was going to be a gloomy, terrible day. Like, everybody just hang in there. This is just a big oil shock. But, knock on wood. Hopefully we just kind of take this in stride, because the market had been under some pressure, earlier in the year. It hasn't been like the year was going perfect and all of a sudden high oil prices took us down. No, look, we're kind of flat for the year. We've seen some volatility as well along the way. So it's kind of, the market's kind of had its posture where enough negativity was priced in where, okay, we have high oil prices, but we already had prices that were too low in some spaces. Like, I think software is priced way too low, and as well as some other industries. So that's where we're at. I'll take it. So what's happening with your channel this week, Daryl?
I put out my weekly video for chart reviews of interesting charts in my portfolio and any trade decisions that I made. I did put out a video on Intuit and CRM last week. It looks like Intuit may be proving me wrong. I don't know what CRM is doing, but this was kind of an interesting exercise looking at the volume against the price. So that's the video I put out yesterday.
All right. See where that goes. And I already finished this video. I have it uploaded on YouTube, and I'm going to end the stream, go have some breakfast, and then release this to members. I've took a look at the companies listed here, pointing out which stocks I expect will rise and which will fall given a high oil price environment. And that'll be out there for you guys. And that'll come in a few minutes. We had a really good audience today. We had well over 50 attendees. That was awesome. We had a lot of good chat. Thank you for that. We had one member join. So we really, really appreciate that. We're going to try to stream on Wednesday, and we'll keep track of this market. I thought we were going to be done with earnings, but it looks like we have a lot of really interesting earnings coming out this week. Probably the biggest name is going to be Broadcom announcing midweek. But even today, Dave's going to come out, but we have a lot of earnings this week. So I think there'll be plenty for us to talk about. I'm going to create videos for members. I create videos for members, release it to the member community first, and then probably about 30 days later, I release them publicly. If you're not a member, take a look at what I release, and that gives you a sampling of what you would see real time when I create them if you were a member. And of course, you get to nominate stocks to be reviewed on these live streams. So if you like to participate in that way, become a member or pay the super chat $5 fee, and we'll cover your stock. So that's it, folks. You guys have a terrific week. I'm glad that we're off to the races on a pretty solid footing. Interesting to see how the market's going to trade here in March, because the first 2 months have been difficult to figure out what's the right lane to get into in this market. But it's also provided some really low stock prices that I've been buying up. So that's it. Everybody have a terrific week. Thanks for tuning in.
Take care, everyone.